What's up? Yo, what's up, everybody? How's it going today? I'll give it like a few minutes just so some people can log on, and then we'll go from there. Hope you guys are doing really well. I'm doing great. It's been a while since I've streamed or since I've updated the public, so here I am. What have I been doing with my time? Mainly just managing the portfolio, doing a lot of research on it, and exercising a lot because my wife said to me, what's the point of having all this money at the end of this bull market if we can't enjoy it and we don't have our health? Then I'm like, you know what? That's true. And then I had an interesting conversation with a friend about how we're like, the top 5, top 10% of the people that will be performing very well in this bull market. If you are one of the people that are watching this video and you follow me, you're probably one of the people in the top 5 or 10% as well that will perform well. So be proud of yourselves, and the only way to enjoy that wealth long term is to take care of yourself physically. So unfortunately, I have to exercise my fat ass, but if you guys can't tell, you guys used to make fun of me quite a bit. So I lost a lot of weight. I lost like 20 pounds, which is kind of crazy, right? So let's jump right into it. Today's going to be a quick 10-minute daily update. Thank you very much for joining me. For those that don't know me, my name is Phil, or Philakone. Phil's short. I've been in the crypto game for 9 years now. Crazy. Started off with like screwing up, losing all of my money in 2015, 2016. Then found a lot of luck with Ethereum in 2017. And here we are, almost 9 years later. Now I live in Turkey, Istanbul. I have a house here with my wife. She's Turkish. We're married. We got like 7 pets, super happy. I got really fat eating a crap ton of good Turkish food. I speak Turkish. And let's go from here, guys. Let's jump into it. So last video, we left off with the stock to flow model, which I'll recap very quickly for you. And then we're going to jump into some historical data, ROI, fear, greed, some of the major charts that you should be looking at aside from just looking at the typical charts on TradingView. So the stock to flow ratio is basically a ratio of the amount of Bitcoins out on the market versus how many is mined. And it shows this beautiful color code where it's like a heat map. And as we cycle through these heat mapped zones from anchored at the Bitcoin halving. So for example, every vertical line you see here, halving. So every time there's a halving, it reaches this purple color at the bottom, okay? This purple color right here at the bottom. And then it starts off at the top again. And then it works its way from the top of the color all the way back down to the bottom. And every time you've seen the stock to flow model actually align with the price of crypto itself. It's very accurate so far. It doesn't mean it needs to stay exactly on this path. It can deviate lower or even higher. But this model says that next year, Bitcoin could be even over $450,000. It has never failed us one single time so far. As you can see, in 12 years, it's never failed us. So why would it fail again? You never know, right? So eventually, we're going to get to the halving, and then it starts off at bright red, and then it leads up, as you can see here, it leads up to orange. It cools off a little bit, and then it goes to yellow, and then this is where the crazy frenzy is around these regions where it gets yellow to green. Same thing happens here. So the place that you want to accumulate at is where it's red. You see it, right? Every time it's red, right after it's purple, it's always after the Bitcoin halving event. And this is where there's a major accumulation period. In 2012, there was an accumulation period in November. In 2016, there was an accumulation period in July. Slightly after the halving, it got red. In 2020, the same thing happened as well. Okay, in June there was an accumulation period. And then after that, it skyrockets to the moon. But what you're going to see is that sometimes there's a dip after the halving, sometimes there's not. But if you take a look at it on the big picture and you actually zoom out, do we really care if there's a major dip? Yes, we do. But that's why it's important to always have cash on hand. So this chart shows you very clearly, like the title of this video, time is running out. So if you are not in a portfolio yet, okay, and you're waiting. I'm not trying to give you financial advice, but you have to think about it from the perspective of how bullish are you. So think about your overall bias, okay? Your long-term bias. Are you bullish long-term? Do you believe there's going to be a bull market that's going to start? Do you believe we're going to be bearish? What's your bias? Ask yourself honestly and give yourself an answer, okay? I believe that long-term, my bias is very bullish and that we are in a bull market despite this short-term dip that we have. So if you can phrase it to yourself and you have a long-term bias, it's going to allow you to make these decisions better, okay? And then the next thing you could be asking yourself is, when is the best time to buy? Is there a better time to buy than others? How am I going to buy? What are some of the strategies I'm going to employ to buy? So this is all from the investor perspective of pretty much dollar cost averaging, adding strength to your portfolio, buying on dips as well. So you have to buy in multiple ways rather than having that FOMO effect of just buying right now, I need to get in. And those people, when they just go in all in at once, that's a major FOMO, and I think it's a flawed strategy. I think that after the Bitcoin halving event, there's a possibility of us dropping to the downside. We have to take that into account, and for the fact that we've seen it happen before, okay? We've seen major dips happen before, and because of that, for example, right here in July of 2016, we saw a dip after the halving of about 30%. So you also have to have a strategy that's in place to get ready for a potential dip. Because it's happened before, it may happen again. But of course, in 2012, there was no dip, okay? No dip at all over here. And then in 2020, there was also no dip as well. So because of that, holy fuck, Bitcoin's at $72,000. I did not know that. So we broke out of this pattern. I thought this pattern was going to continue, but clearly not. Bitcoin is so bullish right now. That's why my portfolio recovered $600,000 today. I didn't even notice the price of Bitcoin. But actually, Bitcoin just broke out recently. It just broke out, and I was at the gym or home gym, so I didn't really know what was going on. But that's great. So if you have that bias long term, you should be buying if Bitcoin does have a dip after the halving. You should be buying if Bitcoin breaks above here as well. Now, another major thing to consider is this, okay? You got to sit down at the end of your bed or on the sofa or having a coffee by yourself and have an honest conversation with yourself. And many people I know that I talk to are fucking delusional, okay? And the reason I say they're delusional is because they're like, you know what? Like, let's just say they have $10,000, okay? They got 10 grand and they want to make as much money as possible. So what they do is they do this. They either pop it all into some high risky bullshit things like meme coins or something very high risk. Okay, they're gonna watch some influencer on YouTube who's being paid a shit ton of money to talk about these coins. Okay, I hope you guys understand that YouTubers are paid to talk about specific coins. They get paid a lot of money. I'm not trying to bash on specific people, but you have to be very careful about who you follow and listen to. Some people are only good for news, and that's great. Like, for example, Coin Bureau and Altcoin Daily, those guys are great for news, okay? But if you want to follow real people that talk about, for example, great coins, like, just to give some shout outs to people out there, is like Benjamin Cohen, right? He's going to give you real honest feedback. You can talk to Lark Davis. You can follow Virtual Bacon. You can follow Brian Jung. Those guys are transparent and they're not paid to shill these coins. So some people just follow the influencers and they put all their money in it. And then what happens is those coins go to zero. So you cannot do that. Go for these high risk investments. Another stupid thing that people do is they say to themselves, all right, I'm going to put 20% of that $10,000 into a portfolio, and the other $8,000, I'm going to day trade with it because I can make more day trading. So the honest conversation you need to have with yourself is, for example, like, have you been profitable before? Okay. If you have not been profitable before consistently as a day trader, then there's no point of you trying to day trade to outperform your portfolio. So it's the FOMO that's kicking in. And the FOMO says something like, oh yeah, I can trade way better than my portfolio can perform. Fuck no. You will not be able to outtrade your portfolio if you don't have the skills, if you haven't been successful day trading and consistent at making profits already. So that's why it's important for you to sit down and divide up your portfolio, be realistic and be like, okay, well, I want to day trade as well. I'm going to put only 20% of my capital into a day trading in the exchange to day trade, and the other 80% I'm going to focus on riding it long term. Because we have to remember that any portfolio that you buy, if you balance the risk accordingly, you can actually 5x to 10x very easily with the right combination of high risk, low risk, and medium risk coins. So, and then also diversifying it in the proper categories and sectors of crypto as well. So that's something to consider. So don't just try to have that FOMO and be like, yeah, I'm going to go for only high risk coins or only day trade to try to profit, because most likely what's going to happen is you're going to put some into your day trading bankroll, then you're going to lose it all, and then you're going to wish that you invested it instead. So be realistic with yourself, okay? So let's jump into the next part here. Let's jump into just some of the, just generally speaking from into the cryptoverse, a lot of charts here. So let's take a look at today, historical risk levels. Let's take a look at fear and greed index and monthly returns, and also ROI after halving today, and the fair regression value, okay? So historical risk levels, mediocre right now, like at most. We're at around the 0.7 range, okay? If you take a look in, for example, like 2017, let's take a look at it, okay? So this is the 2017, and it's correlated to the price as well, all right? So the price of Bitcoin is in the blue, okay? And the risk levels is in the red. So what you're seeing is they somewhat correlate near the end. And if you're noticing right here between September and November, the historical risk levels were about 0.7, right? And that's where Bitcoin was only like $7,000 or $8,000. But if you notice, after the historical risk went above 0.7, that's where the price went parabolic for a very short period of time. So in my opinion, after 0.7, that's where it gets dangerous. Now, if we take a look at, for example, 2021, let's take a look at some of the risk levels over here, okay? Okay, so in 2021, we see that the risk level was ridiculously high. It ended up peaking at 0.9. But you can see as well that like after 0.7, okay, this is right where the resistance usually is. 0.7, 0.8, right there, it ends up blowing up. So from 0.7, we were at like 40, 35, 40K, and then we shot up to like 63K, and then the risk levels also shot up as well. So that's usually what ends up happening. So the risk level will stay at a certain amount, okay? Like anything below 0.4 risk, in my opinion, you should be buying. There's no way you should be scared to enter the market when the risk levels are low. But the thing is, I don't recommend waiting for one specific price to exit the market. You know how when the market drops, you're going to DCA and dollar cost average and keep buying as it gets lower and lower, right? That's how we build up our portfolio at specific intervals of buying. The same concept applies to selling as well. You have to sell on strength and at specific peaks here and there. And that's how you're going to maximize your profit, because the last thing you want to do is be stuck in a position till the next cycle. Don't be one of those idiots that holds on to crypto for like 2 freaking cycles, man. You got to exit the market entirely. Okay, you have to exit every 4 years. You exit and then you rebuy. There's no way you should be holding any coins till the next bull market. Maybe some Bitcoin, but there's really no reason to, in my opinion. So, and then you always look at the fear and the greed index as well. And right now what we see is the fear is low, but the greed's high. It's at 76 right now. Every time we've had a fear of around at an all-time high, okay, for example, here, it always ended up reaching about 78. Okay, so that was in 2021 May. And then before the last all-time high, it reached a fear index of about 75. So it never really got to like let's just hide all of this. Did anything get to the 90s? Yeah, here's the 90s. Okay, here's the 80s and the 90s. Okay, so here's the 70s in 2021 as it goes up, as it goes up, as it goes up. But then if you take a look only at the greed, that's between like 90, 80 and 90, it's always on the way up, right? So right now we're barely scratching the surface of between 80 or sorry, between 80 and 100. So there's still a lot of ways to go. Okay, so moving on. So far, we're gonna have a red month, guys. Like it's inevitable for us to have a red month, okay? You cannot stay bullish forever. For example, in 2012, this bull market, we had 1, 2, 3, 4, 5, 6, 7 bullish months. That was the record we've ever had. So far, Bitcoin has made some ridiculous gains, as you can see here. Look at these gains. They're ridiculous. They're 4 months in a row so far where we're just in the green. So there will be a red month eventually. You just have to make sure that you understand these corrections happen. There's many people that are crying in the market. They can't stand these 20, 30% drops. Then they end up getting so panicked and scared that they literally sell at the bottom. And then after they sell at the bottom, they buy back at the top. That's usually what happens with newer traders. So please understand that dips happen. And every time a dip does happen, it's always going to lead to a buying opportunity because our long-term bias is bullish, okay? And ROI after halving, I've shown this multiple times before that every time there's a halving event, for example, in 2016, we did a 30 ROI after the halving. In 2021, we did a 7.86 ROI after the halving. It's going to be no different after this halving coming up in 2 weeks. Okay, time is running out. You need to understand that the bull market is going to pick up, and all of the historical data, it points toward a major bull market. And for those that are still scared right now, you are not looking at the data enough, okay? Fair regression value, we are actually back to the fair value price of Bitcoin. Okay, so this is a chart that shows an oscillation with a Bitcoin price here with a fair value band, okay? So the fair value band is in the middle. Notice how we're always oscillating up and down. This is the formula for it. It's a log formula for those that are curious. Okay, so we can see that we were below it for a long time, extremely long time. And for the first time in about 1 month, we're now near the lower band. And because we're near the lower band, it's likely we're going to end up popping above it. So the way that the bull market works is it oscillates up and down, above and below this fair market value regression band. It's always done so. When we're in a bear market, it's always below it. When we're in a bull market, it starts from below, very low, to very high, and then it drops below again. See in the years leading up to the bear market here, or the bull market here, in 2020, 2019, it's below it, and then it pops back and stays above it for a while. So eventually, when we're too overextended above the fair value regression band, that's where you know that combining it with like fear and greed index, combining it with historical risk levels as well, it's going to give you a very good signal to exit the market. So knowing how to get into the market, when to buy, buying on strength, buying on dips, understanding that dips happen, is just as important as understanding how to exit the market as well. And by using a bunch of these tools that I'm recommending, then you guys would have a much better chance of trying to time the top, or at least time it so that you exit when there's a clear identification that the bull market is now over. So that's it, guys. I'm done. Hi, everybody. There's not many questions. That's it. I'm going to exit here. Thank you for joining me. For those that are in the Discord group, I'm going to update you guys personally on with a private video through talking about what are the hottest coins for this month so far. So I'll talk to you guys soon. If you enjoyed my content, make sure you hit the like and the subscribe button. And guys, in 1 week, people have been asking about it, so I did it. I am creating a crazy, like probably the best investment guide out there. It's going to be a new course. It's like $125 just to respect my time. Lots of people have been asking for it. I'm going to show you guys everything that I know about investing, and especially talk about my $5.5 million portfolio to show you the hottest picks, how I'm managing it, etc. as well. So stay tuned. I'll see you guys later. Take it easy now. Thank you.